Hi guys, welcome to another Strive podcast. Today we're going to be focusing on the hot topic of real estate. Yes, finally we're discussing real estate. It's coming towards the end of Q3 in 2025, so it'd be good to understand what's been happening in the year so far and what to expect towards the end of the year. I'm really happy to have a good friend of ours and client, James Morris. So, hi James,
Hi,
nice.
Pali. How's it going?
Good, good. Nice to have you on. Finally, we managed to sit
I know,
down
yeah.
and
Many Zoom calls. Very organised.
yeah, and obviously we helped Knight Knox set up their office and real estate offices in the UAE. So we've known each other for quite a while now, and it's been really interesting to see how the space has evolved, and obviously how much you guys have been involved in the real estate space as well. So generally we get lots of inquiries about company formation because that's our bread and butter, and that's what we really do. But it's always linked to some sort of real estate question. So, what do you think of the market? Is something that people will ask us, and we always tell people that we're not real estate brokers, But so hopefully we can help some of our potential clients and existing clients understand more about what the real estate market is like right now in Dubai, and uh, and so I think just to kick things off, I think just tell us a little bit more about Knight Knox, about yourselves, and what you focus on to begin with, and then we can get stuck into the main content of the talk.
Sounds great. Thanks, Pali. So Knight Knox, we've been going now for, this will be our 21st year. We focus on the UK real estate market and still do. We saw a huge opportunity we could really see there was a big shift in the UAE growing and the whole of the Middle East really. The Middle East now dominates the sport. It's got the tennis, the golf, the boxing and the football. So, and the F1. So we really sort of saw there was an opportunity for our clients to invest in Dubai and across the whole of the UAE. So around about 3.5 years ago, I think we actually approached you guys and said we want to set up a company, an office in Dubai, and then obviously you guys helped us do that very sort of efficiently. So we opened up the office about 3 years ago, I think.
I think so, yeah, just shy of 3 years now.
About
Yeah.
3 years, and then we started offering Dubai real estate to all of our UK investors. So we've got an office, obviously in Dubai itself, central Dubai. We've got a full team over there, and obviously we've still got the UK head office in Manchester as well, which works really well because most Dubai agencies are just based in Dubai.
That's true. Yeah.
A lot of the investors now are from the UK, so it makes sense to have a UK base as well as a Dubai base as well. We get a lot of clients from London, Birmingham, Manchester, and we can just meet them the same day, the next day. They don't have to go to Dubai to see someone. So that's worked really, really well.
I can imagine that being a really good value add for a lot of investors and buyers. Yeah, fantastic, good. So, I mean, it feels as though Dubai has become the new Spain for UK investors. And, traditionally it's always been the whole idea, oh, I'll buy a place in Spain, when I have a bit of spare cash and then things like that. And that was the sort of mentality that used to float around. But honestly, it does feel as though Dubai has really become, a place where people are very comfortable investing in. What do you think the major draw is to Dubai at the moment? And I'm just looking at some statistics, and you could correct me if I'm wrong, but according to me, after UK, UK nationals are the number one European nationality investing in the UAE, and I think they're second only to Indian nationals on the global front. So obviously, there's a hell of a lot of interest from people in the UK. What do you think the key triggers for that are?
You used a good word there, comfortable. I think historically, going back sort of 15 years or whatever, people wouldn't have thought of Dubai as being a comfortable, safe place to invest. If you'd have asked me 7 years ago, would I own a company in Dubai, I'd say, I don't know, I wouldn't. And I think it's evolving fast. I've never felt more comfortable owning a Dubai real estate company. I've never felt more comfortable living in Dubai and spending my time in Dubai. And that's myself. I think it's the same for a lot of people. The comfort is now there. The market's matured a lot over the last 5, 6, 7 years in Dubai. The off-plan market is extremely safe, and we can talk about that a bit later on about what the government have put in place to make it a sort of safe and protected market, so your funds are essentially ring-fenced. But I think people are getting a little bit tired of the UK, whether that's high taxation. For landlords now in the UK, I'm a landlord myself. I've owned numerous apartments over the years, and I've started to dispose of most of them, unfortunately. But if it's not the high taxation, it's high service charges, it's high council tax, there's the government massively supports tenants now. I'm not saying that's the wrong thing, but as an investor, you have to protect your own capital and your own investments and your own assets. And it just feels like you're just getting penalised for owning a property in the UK. So Dubai offers very high rental yields because there's high demand, huge scope for capital appreciation, which I don't think the UK at the moment is offering. The market's quite stagnant. You know, they've raised all the stamp duty now, which is basically just put a pause in the whole market. No one's selling anything because why would you? You're going to lose most of it to tax. So I think, high rental yields, big scope for capital appreciation, amazing visa incentives. You know, they do a 10-year golden visa now. So you spend, give or take £400,000, which is probably half the price of a one bed in London, and you can get a 10-year golden visa in the whole of the UAE.
Actually, just on that point, is that based on the value of the property you're investing in, or do you have to pay that all up in order to qualify for that 10-year visa?
So let's say you buy somewhere, the threshold's 2 million dirhams. Yeah. So whenever you're watching this, 420,000 pounds, the pound's strong at the moment against the dirhams, it's a good time. So you buy somewhere at 420,000 pounds, let's say you buy off plan, completes in say 3 years' time. Even though it completes in 3 years' time, once you've paid your initial 20% down payment and signed the SBA, you guys can take over and get them the golden visa.
Yeah, okay. So
Though they've only paid 20%, they can at that point, because we did one with Calvin recently, he's bought a villa for about 12 million dirhams. He's only paid 20%. He's now got his 10-year golden visa. So that's him and his family for 10 years, can go to the UAE as much as they want. They can set up bank accounts, they can set up companies. They're basically a resident, which is another amazing incentive.
So, with the clients you have coming through, what's the percentage split between people who are looking to buy something for themselves because they want to move versus people that are purely looking to invest and look at it as a business investment? Yeah.
Good question. I would say 2 years ago, most of our clients were just pure investors. Now, we're getting more and more phone calls on a daily basis of, we want to move, we want to move. We've got 2 kids, we want to move. James, how do we move? What's the process? We want to go yesterday, sort of thing. So there's still a good split. Not everyone can move like that. People have got commitments, kids in school, whatever. But those investors would still buy for investment. So it's quite a good split. We sort of categorise three types of investors. Investors that want to just buy to invest, no plan to move. Some that want a bit of a middle, bit of a holiday home for 8 weeks of the year. The rest of it, investment. And then the third sort of category is people who want to move to live in Dubai full time. So we get a really good split now. But, if you don't want to move to Dubai just yet, you can certainly still benefit from a really good investment.
And probably putting that and getting investment done, and just holding tight until you're ready to move, I guess, at some point. Yeah, no, I mean, even we've seen a lot of, we get lots of inquiries where people want to actually move for different reasons, lifestyle, saving on tax and things like this as well. So I could definitely vouch for that as well in our business and as well. In terms of like the market, so right now we're sitting here in September 2025, and
this year's gone so fast.
This year, I know this year's gone really fast for us. I've started seeing some Christmas merchandise already in stores, and it's not even Halloween yet. Christmas stuff is already out there.
My brain's still in summer mode.
In terms of the market, sort of say this year compared to last year, what are the key changes that you felt and seen? Have you, I know it was, a lot of people were saying it was very frothy at one point, but I know you've also mentioned just now that people feel comfortable. It's a safe market. What's your take on how the last sort of 9 months have been so far, and what do you expect between now and the end of the year, I guess, as well? Yeah.
Again, it's the amount of times we hear the market's bubbling, it's getting too hot, it's going to correct. Everyone's saying that about Dubai for year after year after year. And it's those, if you'd have bought 3 years ago when investors started saying that, you could have already made 60-70% of your investment. So I think on that point, I think it's most of the what's driving the market is the population growth, organic population growth. I think in the last 12 months alone, it's about 250,000 people have moved to Dubai. And I think in terms of units that are being handed over, it's about 35,000.
Okay.
There's a huge shortfall.
A disparity.
Huge disparity.
Okay.
That gap's only going to increase and increase and increase because although a lot of units are being sold, they're being sold off plan. So let's say this year, let's say 80,000 units were sold, only 27, 30,000 were delivered. So it's causing a huge shortfall of properties. There's a huge undersupply of townhouses, villas, waterfront apartments. So that's what's causing a lot of the price growth. And again, I don't want to sort of slate the UK too much, but there's no doubt in the next autumn budget, come next month, there's going to be more tax rises coming. It's inevitable.
Yeah, no, and we're bracing
Well,
ourselves.
everyone's ready for it. And it's like, what can you do? You either sit here and take it, which some people have to do, or some of your more smarter, savvy investors will go, no, I'll look at the UAE, because that's probably now the most safest, comfortable market with zero to low taxation that you can invest into. Yeah, you've got low taxation in Switzerland and the Cayman Islands, but realistically, I mean, who's really going to go and buy property? It's a very small, minute number of people. You wouldn't know where to start, really.
I think also when you buy in a place like Dubai, you're also leaving yourself open to the opportunity to live there, because it is a place where you could see yourself potentially living, because it's a bustling industry. You've got your schools there, you've got commerce, tons of commerce activity going on. So yeah, finances. So you're almost like leaving yourself with an option to base yourself out there and so you're almost leading with the investment and then leaving yourself in a flexible position. So yeah, you're right. I mean, we see it all the time with business owners that want to restructure and move their headquarters to the UAE. A lot of sort of savvy investors, business owners who are quite mobile as well and have the flexibility to do so are really seriously starting to think about investing in the UAE. And no, I know we keep mentioning Dubai, but let's not forget about Abu Dhabi and what's happening in Ras Al Khaimah at the moment as well. With, I think the gambling license is coming in as well soon, and the new casino's opening soon. Yeah,
June, July 27.
that's in Ras Al Khaimah,
That's
right?
Ras Al Khaimah. So that's $4 billion resort that's being built. It's causing huge hype and.
Well, interestingly, I think it's funny you talk about population growth, because in 2020, the UAE government announced that they wanted to try to double the population of the country by 2040. And the last time I checked the statistics, I think they were on that trajectory of reaching that goal.
Crazy. I think the target for 4 million, I think, was the start of next year. So already way ahead of that.
Amazing, isn't it? Sometimes like you can have a country that's basically zero tax, near enough, but it's still got perfectly safe streets, no potholes, and then great lifestyle, good public services, good public transport. It's interesting, isn't it, where you can actually still achieve those things without having to tax everyone to the hilt.
Know where the taxes in the UK going, because
That's another conversation. Let's not get too deep into that today, but but I think I think we understand the sentiment that we're trying to get across. But you touched a little bit on off-plan earlier, and you said it's become a lot more secure, and the government's put in some, I suppose, regulations and rules in place to make people feel more comfortable and in investing in off-plan. Could you give me an example of what some of these things are?
Yeah, so it's when you buy off plan now, all the funds you pay, they pay into a government-controlled escrow account. So typically, let's say you buy off plan in the UK, for example, or in Dubai previously, you buy somewhere at 2 million dirhams, all the funds you pay go to the developer. They can then spend that money as they wish. You hope they'll spend it on the project, but some can go missing, whatever. No more in Dubai. So all the funds you pay are paid into a government-controlled escrow account, which basically fully protects those funds. So a bit of a quick example. If they're building a project for £100 million, they've got to build to the first 25% of the project using their own funds. The developers use their own funds. They can then apply to the sort of Dubai government, essentially, to release the equivalent amount of funds that have been built to the developer. So they'll build 25% with their own money. They'll then apply to the government, who'll come and do a site inspection. They'll come inspect that that amount of work has been done and done to the right standard. Once they're happy with that, they'll then release that equivalent amount of money that's been built to the developer. They'll then build the next 25% with their own funds, same again and same again. So the funds are always protected in this government-controlled escrow account, which I think for an overseas investor buying is really important to know, because although Dubai is a very safe place, you still want to be unsure that you want to make sure that what you're paying is completely protected, and it is now.
Yeah, of course. I remember, I think there were a lot of people got burnt around 2008 when I think this sort of escrow system wasn't in place. And I think some projects actually shut down, and a lot of investors and buyers lost out on their initial sort of down payments and the payments they've been making as well. So it's good to hear that there's measures in place, and the government's obviously listening to what's required as well by investors. And in terms of off-plan, sometimes you always hear these debates between, is it better to buy off-plan, is it better to buy ready-made and secondary market units or properties? And so I think first things first, I think one question I have is, if I bought an off-plan property, am I getting a better deal in terms of price point, etc., than buying a completed property? So is there quite a big disparity between the actual valuation of off-plan versus ready built?
It's a good question. It's quite a subjective question, because I guess it's a case-by-case basis. Some projects are better than others for price points off-plan. As a general rule, if you're based overseas, it's much easier to buy off-plan, and I'll tell you why. So, one, you can get into sort of new projects right at the very start of a launch, so you can sort of handpick the very best units. If you're buying a secondary market, you're buying just what's available. So you can buy the very best units at the very sort of lowest launch prices, and you can buy on payment plans. So let's say you buy something which completes in 3 years' time. Not a lot of clients have got the full amount up front now. One of the first questions we get asked when we get a new inquiry is, what's the payment plan? Is there a payment plan? If you buy the secondary market, there's no payment plan. You're paying now. Yeah. And that is what it is. So you buy off plan, you can handpick a unit, you can get into a launch at the start, and then you can buy in a sort of nice staggered payment plan over, say, 2, 3, 4 years if you want. So you don't need that full amount now. You can lock in a 2025 price, but pay for it slowly over the course of the construction. So I think, as a general rule, off-plan is going to get you a better price, a better unit, and a more accessible and easier plan to follow for sort of cash flow purposes.
And what's the market like in terms of, what's the mortgage market like over there? Is it easy to refinance an off-plan property? And what's the general accessibility to stuff like mortgage products in general from your perspective as well?
Good, as a one-word answer. All the major banks are over there. I've had a few mortgages recently which have flown through. Bank of Abu Dhabi, HSBC. So all your sort of your household names. And I think, let's say you buy off plan, you'll follow a payment plan. Typically, you'll pay between 40 and 60%. You'll pay during the construction period, over 2 or 3 years. That can't be mortgaged. That's got to be paid with cash deposits. Sure. So you might pay 20% now, 10% in 6 months, same again. The completion payment, that could be anything from sort of 40 to 60%, depending on what you've paid during the construction. Sure. That we can apply for a mortgage for. Okay. Obviously, it's a case-by-case basis, depends on the client and depends on what you bought, but typically there's no real reasons why we shouldn't be able to get you a mortgage on your completion payment.
Is that because the banks feel a little bit more secure because they know that the build has gone up to a certain point and a certain amount's already been paid up towards a unit, and then they're almost a little bit more willing to lend you that final 40% or so that you might need to complete? Or is that your thinking on that? Or
banks would want to see the project pretty much completed before we can apply for the mortgage. So I would say, as a general rule, maybe 2 months before handover, we'd look to sort of get things in place, so when they go and do evaluation on the property, it's pretty much completed. Yeah. You can't, for example, apply for your mortgage a year before completion because it's not completed. They can't do a
So
valuation.
interestingly, so you could be in a situation, and this can go the other way as well, obviously, but the valuation could come back higher than what you initially agreed to pay, what you bought the unit for, and then that would mean that you could release more equity or more capital potentially against the property, or am I getting the wrong end of the stick here?
Yeah, it's probably not something I would probably advise to a client. I'd probably look at it as just a case of more than likely the valuation should stack up as per the SBA that you signed. But yeah, I'd always say to clients, it's good to have the full funds available just in case there's a problem with the mortgage. But at the moment, we found no issues at all. Banks are quite willing to give out mortgages. And also, the better developer you buy with, the better chance you've got of getting a mortgage. So we only really deal with sort of the top developers. I mean, in Dubai now, there's about 1,000 or maybe 2,000 developers now.
Really? Wow.
We lose track. You can't keep you track them all. We probably sell for maybe 30 of them. You know, so we wouldn't. A lot of them we wouldn't even get involved with because we sell for the major developers.
Sure. Okay. Understand. And interesting. In terms of if you say buy an off-plan property, are you able to sell your investment if you want to during that build phase? I'm not sure. I'm not sure if you are or not these days. What's the rules around that right now?
So typically, again, it's a case-by-case basis, depending on the developer. But usually, once you've paid 40% of the property, you can what you call flip. You can flip the contract and you can resell to someone else. So it's a term we get asked quite a lot. Oh, can you recommend something that we can flip? You know, so
See, okay.
buy a villa at, let's just say 5 million dirhams. Once you've paid up to 40%, at that point, you can then sell the villa, even though you've only paid 40%. So some clients will actually buy things with that as their sort of goal and their intentions is to buy them.
How many of your buyers fall into that category? I'm interested. How many people are using this almost as a trading? It's almost like a trading strategy, isn't it, for them?
Again, it's something that we work on full transparency, and I think there's so many agents in Dubai now that when they speak to their clients, just say yes to everything. Can I flip it? Yes, you can flip it. They're just dying to get a sale in. It's not what we do. We like to give transparent, honest advice so that client comes back to us for many, many years. So we would never say to a client, you can definitely flip this, because you don't know that. Anything can happen. There's certain types of investments which are better for flipping. If you're going to buy a cheap studio at £200,000, that's not a flipping investment because there's a load of studios being built all the time. If you're going to buy a waterfront 2-bed apartment with amazing sea views that sells out on day one of a launch, and you can get one of those units, that's prime for flipping because there's only a small number of them. And if a unit's hard to get on launch, it means there's big demand and you can resell in the future. Same again, if you buy a nice luxury villa from a developer like Miras, Emaar, sort of one of the top sort of government developers, your chances of flipping again are increased massively because there's not many of them and everyone wants to buy them.
Gotcha. Yeah.
It's really important that you work on the right advice and don't just listen to, yes, you can do that. But we get clients all the time say, I want to buy a 1-bed and flip it. I'll say, it's not, don't buy it then. But let's look at why a 1-bed's still a good investment without the need to flip it.
Yeah, understood.
You can buy a one-bed apartment for, we'll work in pounds, not dirhams. Let's say for £250,000, that on completion could easily be worth 300, 320, 330. You know, so it's, but if it's,
You may get a solid yield as well if you decide to rent it out at that point. Yeah.
We're seeing now probably, 8 to 10% annually. You want to do short-term lets near the casino, 12% and above.
Wow, that's very interesting. Yeah, that you can. London right now, there's barely any yield. I think these days. I think for
Gosh, yeah.
It costs you actually. Yeah, that's true. It costs you actually to keep the whole thing running. So in terms of let's get into a little bit of talking deals. So what are the most coveted areas and most the areas of good interest in Dubai? Because I know this always moves around. So, like I said, this is September 2025. So, what areas are gaining quite a lot of interest? Not just in Dubai, but maybe Abu Dhabi as well. Yeah.
Definitely. Abu Dhabi one. Let's start with Abu Dhabi. I think Abu Dhabi is an amazing place to invest now. I really, really do. I think it's got massive potential.
Reason for saying that is, yeah.
I think Abu Dhabi offers massive potential. You got the recent announcement of Disneyland. Disneyland's coming to Abu Dhabi. That's going to bring a huge amount of interest. Massive short-term let market as well. You've obviously got the Grand Prix in Abu Dhabi, and I think you can get your money will go a lot further. So you can get. We sell quite a few of the beachfront villas in Abu Dhabi from some of the Aldar, Mudon, some of the big government developers.
They do majority Abu Dhabi. The projects don't the Aldar, I think, moved on. Yeah.
Pretty much all Abu Dhabi now. So I think anything around sort of Yas Island, Sadia Island, it's not cheap now. It's the price is moving a lot, but I think it's got big scope for future growth.
It's interesting. I think a lot of families do like Abu Dhabi because it's a little bit more slower paced than Dubai as well, and quieter. So yeah, that's interesting. Okay, so Abu Dhabi is potentially an area people should look into. Anything else that you think is happening? I know there was a lot of development going on around JVC, Emaar South as well.
Emaar South around the new airport. So you've got the new Al Maktoum Airport. That'll be the world's biggest airport once that opens. So they're actually going to shift the whole of the Emirates fleet to the new airport when it opens in Dubai South.
That actually is closer to Abu Dhabi on that side as well. So even Abu Dhabi might get some pickup and benefits and pickup from that as well. Yeah.
You get a lot of inquiries now for Dubai South because you can still buy at good prices as well. And I think Dubai South's an area which I would sort of say you're not going to get this real quick, immediate growth because the airport's going to take time. But I think if you're an investor that's happy to take a nice yield for the next 5-6 years, but then after that sort of 5-6 years, see some real strong appreciation, I think Dubai South's a really good option.
Okay.
We've got some nice projects with.
Dubai South is positioned just below the Jebel Ali Palm, isn't it, as well? So and there's a lot going on.
Obviously, New Palm Jebel Ali's coming as well. So a lot of it's sort of shifting to that part of south of Dubai. So yeah, Dubai South, obviously near we mentioned the casino before. The new Wynn Casino Resort, double size, the Wynn Las Vegas, on Al Marjan Island. So huge hype around that. And there's an island just off there called Sinir Island in Al Quwain, a different Emirati. We've sold loads in that island. Again, you can get a one-bed apartment with private beach access. You've got a yacht marina which goes direct to the Wynn Casino in about 8 minutes. You can get a one-bed apartment there for about £265,000.
Okay, wow.
Incredible.
Yeah.
You send clients the pictures and videos of it, and they're like, I can afford this in my budget. It's crazy. We sold quite a lot of one beds there at the start of the year. Clients have already made 25-30%, and they've only put down 30%.
Yeah. And then when you put down,
they made 30 on the total price, so they've almost doubled their cash invested.
Yeah, already, yeah, that's true.
So, yeah, I'd say Sinir Island, Al Marjan around the casino, Dubai South, Abu Dhabi. Dubai Islands, which used to be called Deira Islands.
Oh yes, I remember that.
On the coastal down there.
A bit happening there now.
Down there, Maritime City. I think anything sort of oceanfront, because oceanfront is supply and demand. There's only so much coastal you can build on. And in Dubai, it's pretty much built on.
Nearly all built on. Yeah.
You've got Maritime City there. You've got Dubai Islands. You've got the odd projects on the Palm and that hit here and there, but that's pretty much it. So you get something on that coastal front, and
the opportunity to potentially, fantastic. Yeah, that's a very good point. I never thought about that, because when you look at, like, go to Google Maps and look at Dubai from Google Maps and above, you see the coastline just all sort of built across, and so many developments scattered along there now. So there's not much space left along.
A lot of it's hotels, a lot of it's leasehold for locals. So there's only so much freehold on there that's left to buy. So anything around sort of waterfront, you'll do really well with.
Okay, Okay, interesting. So, in terms of from looking at it from an investor's perspective, you've got sort of, I suppose, the scale of affordable units, and then you've got the luxury end of the market. How do you think someone should decide where to invest if they had between those two options? Do you still see really good appreciation on both? Are there some specific considerations, I suppose, if that someone should be taking on board? Is it better for someone to maybe invest in one villa property on a beach, on a beachfront villa, or is it better for them to diversify their investment across maybe 5 or 6 smaller units? How would you guide a client through that sort of line of questioning, I suppose? Yeah.
Question, and again, it's quite subjective. Every client we speak to is different, and although we can advise and give our expertise advice on what we think is the best way to go about it, ultimately they'll have their own instincts of what they want to do with their money. So, for example, I had a good client who I've been dealing with now for the last sort of 4 or 5 months. He's actually from he's from Salford in Manchester.
Okay.
He had quite a good budget, sort of £1 million-ish, give or take. And with that kind of budget, you can go a few different ways. You can go, right, do we want to buy one sort of high-end luxury unit? Do you want to buy maybe 2, one notch down? Do you want to buy multiple cheaper units? And he was adamant he wanted to buy multiple units, get into new launches right at the start, buy the lowest possible price units in each development. So he's been buying units like 1.1 million dirhams, getting in right at the start, knowing he's going to get a really strong yield because he's bought low. So he's not as focused on relying on capital appreciation for a good investment. He's going on the yield. Other clients we've got, Richard, who's recently set up the company. He wanted to go more luxury, so he's bought 2 units. He bought in Ellington on Al Marjan next to the casino. He bought one for about 2.5 million dirhams, and he's just about to buy the one in Paso on the Palm. So every client's different. I'll question as much as I can. I'll get to know the client and ask, what's driving the investment, what's driving this purchase, and then the more I know, the more I can advise.
Advice you can provide. Yeah.
I would say typically, as a general rule, the more luxury the property, the more growth you're going to get, because it's more of a scarce asset.
And I think generally people forget that accessing, I think the price of luxury property in the UAE in a place like Dubai is actually still relatively cheap compared to other major cities in other parts of the world as well, like London, New York, and so forth. So yeah, I think people see a lot of headroom still there, I suppose.
Yeah, a lot of scope for growth still. I think I saw a stat actually today about the price per square foot in Dubai, and on the chart was like there. London was like there, and Hong Kong was like there. So people think Dubai is expensive, but it's actually really not compared to other major cities.
If you look at it relatively, yeah, that's true.
You can get beachfront villas, 6,000-7,000 square foot with pools, and I'm talking beach on your doorstep, for like £2 million. That sounds like a lot of money, and it is a lot of money. But you put that £2 million in London, you're not getting a 7,000 square foot beachfront villa, unfortunately.
Yeah, no, nothing close to anything like that at all. Yeah, okay. No, that's good to know the contrast between the luxury market versus the more affordable, I suppose, apartment type investments as well. So I think that's gonna be very useful for a lot of our listeners and viewers as well. And one of the things I wanted to touch on, and I think we've been working together on this a bit recently, is one of the areas that we've noticed is many people aren't sure how to buy property, whether they should buy it in their own personal name, under their personal credentials, whether it's a good idea to put it through and open a company in the UAE, like a holding company, and purchase through that. And I think I wanted to sort of just share some thoughts around that whole space myself. So when it comes to like your initial conversations, do you find clients asking these types of questions and asking maybe about their tax position if they remain in the UK? Because if you start getting a good yield and you own that property yourself, you want to keep as much of that as possible. And you know, one of the reasons people want to invest in Dubai is because of the tax breaks. But I guess if you live in the UK and you receive rent from a Dubai property, you're gonna have to declare that on your tax return in the UK.
Yeah.
And so many people just aren't aware that it might be better for them to actually invest in property through a holding company, I guess, where they can keep the profits inside the holding company, so that you don't get taxed on those profits at the rate of the income tax bands you fall into. So I think that's one of the changes that I think is going to happen, where people are going to wake up to actually the whole idea of, hold on a second, I should really be ring fencing these investments in property inside like a foundation or holding company as such, as well. But do you find your clients quite aware of this, or is it something that you feel we need to educate people about a bit more? Yeah.
Obviously, everyone hears Dubai and just assumes there's no tax, and that's the case if you're a tax resident of Dubai. Unfortunately, if you're living in the UK and you buy this property in Dubai in your personal name and you bring all this money back to the UK, you're going to face a tax bill, or you should be doing. You should be declaring that income. Now, obviously, structuring the investment the right way, that's where you guys come in. You know, you can massively benefit from Dubai's tax regulations and tax laws. So it's something that I would say some clients know about. Maybe more your seasoned investors, or maybe the higher budget clients will already sort of know about the fact that, right, okay, I'm about to spend £1-2 million. Let's get it structured right before we go any further, so that those investments and assets are essentially protected with a holding company. Some of your smaller budget clients who just want to buy one quick unit, you know, you've got to sort of educate them and say, just so you know, any funds you bring back will be, liable for UK tax.
Absolutely, yeah. We get so many calls from people who've already made the investment and then they have this aha moment. And so, the ideal way to buy property in the UAE is you want to set up a holding company out there. Corporation tax is only 9% on profits anyway. And if you're investing a significant amount in the UAE, you're likely to be on the higher rate of tax in the UK. So let's assume that's the case. So you're going to be paying whatever 40-50% income tax in the UK. Now, if that property is generating you a good rental income, then you don't really want to have that coming into your personal account, whether that personal account's in the UAE or in the UK, because you're going to end up paying 40-50% tax on that rental income. So if you put that inside a holding company, then all of a sudden your exposure is just the 9% corporation tax, and that's only if it makes a certain amount of profit. Yeah, because if the profit of that company is below 375,000 dirhams, which I think is around 80-90,000 pounds, you actually pay zero anyway. And this is something that people should set up from the outset, because imagine saving all that on taxation. It gives you more buying power for your next investment as well. So all of a sudden, your buying power for investment number 2, 3, 4 is gone up by 40-50%, just purely through careful tax structuring. So just by spending like a few £1,000s and just maybe 1,000 or 2,000 a year just to maintain the structure, which is going to be a lot less than the amount of tax you're going to be paying, you're now in a really good position. And if you sell the property, then obviously the gains will go into the company, and there you're again only being taxed 9% corporation tax as well. So it's just something that I find it's a bit of a rookie mistake I think a lot of people are making. And I think we're doing our best at Strive to try to educate property investors to hold their assets inside like a holding company as well, and or maybe even something called a foundation. But now we're getting into technicalities as well going forward. But okay, excellent. So look, Knight Knox, so this is where we're going to start being all salesy and pitch ourselves out there and pimp ourselves out. So look, there are tons of brokers. There's tons of you lot out there. And, so I beg the question, like, what makes you different? Why should people work with Knight Knox? How do you differentiate yourselves from all the noise and from all the other brokers that are out there hustling at the moment for sales?
There's a lot of good brokers in Dubai. There's also a lot of terrible brokers in Dubai. So it's, I think what sets us apart in very brief summary is we've got a UK office. We're not just a company that's just based in Dubai. So if you're based in the UK and you want to buy a Dubai investment, we're much closer to home. You can come and meet us. You can come and sit in the office. We can come and meet you for a coffee whenever you want. More that sort of closer to home, peace of mind that someone's there in the UK, not just 7 hours on a flight away. That's one thing I would say. Secondly, we have been going for 20 years. So a lot of that's 20 years is a lot of the UK side, but still that sort of knowledge and expertise and experience has been drafted across to the Dubai company. And the Dubai side's quite a small, close-knit team. We're not a company of 300 brokers where everyone's on commission only, just desperate to sell something to survive. We're a small team. They're a salaried team as well. So it's not just commission only. So it just, and I'm doing that, so it just takes off that pressure that they have to sell something.
And maybe mis-selling something, you know.
Selling something, giving bad advice. So everyone's a salaried employee. They're commissioned as well.
That's great. That's I've never heard of any broker out there doing that.
The one's doing it pretty much, and it's working really well. So they're obviously incentivized to sell by a smaller commission, but ultimately they're there to give advice and the best service. And I think if we lose some sales because of that, c'est la vie. But I know longer term, we're going to be getting clients who are happier, wanting to come back more. And we get a lot of business from referrals, a lot from referrals. They'll come and they'll invest. My friend wants to buy. My uncle wants to buy. Can you speak to him? So that's another, I would say, another sort of differentiation where we are, difference. You know, we only work for the best developers. You know, we're here to give honest and transparent advice and actually listen to what your requirements are. It's funny because I actually made some inquiries with a couple of agencies myself, mystery shopping, and it's quite eye-opening to some of the service you get from some of these brokers. And it's, you know...
What way? I'm curious to know.
Some of them never get back to you, first of all, which I find bonkers. You make an inquiry and you sort of leave notes saying, I've got quite a healthy budget, never hear from them. You have to sort of follow up, which is, I mean, I don't know why that's the case. Secondly is, you make an inquiry, you don't get a phone call, you just get a WhatsApp message. And within 5 minutes, I've been bombarded with 20 brochures. No, just on WhatsApp, 20 brochures, this one's the best one, that one's the best one, this is the best one. And I'm just like, if I didn't know Dubai real estate, I would have no idea what any of this meant.
Almost puts you off. Yeah.
I think it's a minefield. Dubai real estate, to someone experienced, is a bit of a minefield. There's thousands of developers, thousands of projects. Where do I invest? Everyone's telling me it's the next best thing. You need someone to sit down, get on a Zoom call. Number one, meet face-to-face if you can. If you can't meet face-to-face, let's get on a Zoom call. Yeah. Worst case, a minimum a phone call. If someone's serious about investing their money, they'll get on a phone call with you. And then just have a conversation, have a chat about what's the goals. What you want to buy in Dubai? Why do you want to buy in Dubai? Tell me why you want to buy in Dubai.
It's almost like you guys are more like consultants than just pure brokers and agents, which it sounds almost similar to us in it, but obviously in our line of business we do obviously the company setup stuff. But you know, we with every single client we'll always do face-to-face or video call at a minimum. Just, you know, from the get-go, to be honest with you as well. And I think it just starts creating a lot more transparency and trust, I guess, and credibility as well. Yeah.
First question we'll ask is, why do you want to buy in Dubai? What's attracting you to Dubai? What's the budget? You know, how's that budget broken down? Is it all cash you've got now? Is it cash you're going to get? You've got a bit now, you're going to get a bit next month, a bit next month. With all these metrics, we can work out what's the right project for you. Because you can afford, with that budget, you can afford X, Y, and Z. From those ones, this one's got the best payment plan for you. And from all these projects, we might say to them, right, after all the information you've given us and the data you've given us, we recommend this, this, and this for these reasons. Then we'll chat about which one do you like the look of, you know, what works better for you in terms of location. This one's better for yield, that one's better for growth. This one completes in 1 year, this completes in 4 years. And we can sort of fine tune the investment based on their requirements, their data they've given us.
Yeah, so you're not bombarding them with everything. You're sort of curating
Like a tailor-made.
tailor-made list of options, yeah, based on budget and their cash flow scenario in terms of how frequent they want to make payments, the amount of payments they can afford, and that side of things. That's brilliant. Yeah, no, that is so much better.
Back to this sort of inquiries that I made, and sometimes I replied to them acting a little bit dumb, saying like, "Sorry, what have you sent me here? You know, you tell me this developer's the best developer and this one's the best location. If I've never been to Dubai or been there once on a holiday with my family, how am I supposed to know that Miras are a great developer, or I've even heard of Miras, or heard of Ellington, or heard of..." And they use terminology like, "Oh, do you want to, you know, we recommend to buy in RAK, R-A-K," and I'm like, "Sorry, where's RAK?" You know, Ras Al Khaimah, we know it, I know it as, but if you're a client based in the UK, you don't know what RAK is, you know, and it's just, so we go the extra mile to understand the client. We've got the UK office, we've got a small, close-knit team.
Feels like a well-paced process as well. Yeah, yeah, which is fun, which is good.
You can inquire and they say, "You've got to buy today, you're going to miss the best units."
Yeah,
You're going to buy today.
yeah, true. Yeah, it's a big commitment. So yeah, of course. Well, James, look, you know, oh man, this has been really, really insightful, even for myself. You know? And I mean, it's. I'm sure a lot of our viewers and listeners are going to find this really, really useful, and I think they'll want us to come back together, every quarter or so to see what's been going on in the market. So I think we should definitely keep this up. But you know, honestly, just have to say, you know, thanks for making the time to join me on.
Thanks for having me.
On this bit of content, and looking forward to seeing how things develop at Knight Knox going forward.
Have a good Q4. Yeah. Thanks, Pali. Cheers. Thank you.